What's up everybody, Alexander the Day Trading Champ, and in this video we're going to go over exactly what you need to know to trade the market today. Alright, we got some significant opportunities. Today is a day that has been lining up for weeks now. This is one of those days where if you are on the right side of the spectrum, guys, you don't even need a lot of money to make a lot of money. Alright, you can literally have $1,000 invested and you could be walking away with $10,000 today if you know how to trade it, and by the end of this video you will know how to trade it. Alright, so stick around the whole way through. Today is an incredible opportunity and you're going to learn exactly why coming here soon. Alright guys, the first important thing we need to point out and go over today is the US dollar. Alright, you look at the chart, and if you're a novice trader, you don't see it at all. I guarantee it. Alright, but there's some very important things to point out here, and I'm going to open your mind to the idea. Alright, so you're looking at the chart, you don't really know what's going on, but I see it, okay? And I'll show you exactly what it is. So a lot of people, they look at the chart and they just see a bunch of candles. They see like, okay, blue line crosses the red line. They think RSI is at 51. None of that shit helps you, alright? You gotta, it helps you when you know how to use it, alright? But just looking at it and stating like, hey, the blue line crossed the red line today, or the RSI is at 51, that doesn't mean shit, alright? What you need to do is notice right here, alright, that we search through the SMA, and we've talked about this, right? We said we were going to search through the SMA, and we said we were going to get a correction, right? We said the oil was going to drop. Guys, our macro analysis has been on point. You can go back on the channel and see that for yourself. Now we're getting a bearish cross or bearish hook forming on the MACD, but why is this unlikely to go through fully, right? Why is this unlikely that we're actually going to break below the SMA? Let me explain to you right now, okay? So what's not apparent is that we're on a 1 month uptrend here, and in this 1 month uptrend, we're at the bottom of the trend, all right, which gives us powerful, chance to break out higher on the dollar here. So though it looks like dollar is getting crushed, it looks like it's about to try to retest and break through the SMA. What you don't realize is, look, if I could drop the line, I would right here. This is the line, all right? This is the uptrend line for the last month since the dollar was getting crushed, right? This was the trend reversal that led to the dollar going up now. And when you're at the bottom of the trend, the chance for a breakout higher or for a move up higher becomes significantly higher. Does that make sense? When you're at the top of the trend, all right, then your chance to keep going higher are less. When you're at the bottom of the trend, you have much higher chance to go up. All right, so it's not about thinking, oh my God, is the Fed going to cut the rates for the next 5 years? It's about what is the chart telling you and how do you trade it based off of the chart. So that's going to bring us into our next trade, or the idea we have for today. All right, short on gold. And what do we have today, guys? Today is jobs report, first Friday of the month, October 2nd. So once again, this is one of those signature initial reaction trades we love to take. All right, so let's say this jobs report is great. They make tons of new jobs for the economy. And what's going to happen? Positive spike or negative spike? You want to trade in the opposite direction of that. All right, now let me tell you why you don't want to trade the S&P 500 today. All right, it's very simple, and I'll show you why right now. Let's go to the options chain, and let's see. Let's go 3 days out, all right? Which most people don't even want to trade contracts that are 3 days out, but all right. Look at the closest what's it called? Strike, all right? $31. $3,100 you're putting into one contract. All right, now let's go to gold instead. How much is gold worth? Gold's only worth 16 bucks. It's half the price. Why? Because there's implied volatility on the S&P 500 after Trump tests positive for COVID. The market drops overnight. All right, so it makes sense. But look, we get a double bottom here, so now we got temporarily more upside potential. That's awesome for us. Why? Because we're about to get this jobs report. Watch what happens. We spike up to this level, and then boom, you short it. All right, now. Of course, that's just a template for what could happen today, but obviously, real time, you're going to have to be watching it and seeing what's happening, alright, but that's a very likely reaction, alright, we get a spike up, after about 20-30 minutes, you want to trade it in the opposite direction, alright, if you haven't seen how we traded the Fed meeting a couple weeks ago, that video could be very helpful for you in identifying the time frame. I believe it was around 30 minutes after is when we caught the reversal, got in, and those were about 20x contracts from top to bottom, alright? So here's the thing. Instead of trading the S&P 500, what you can do is, right, because the significance here is not that Trump caught the virus, alright? We want to go off the statistics, the numbers, the charts, and the charts are telling us, alright, we're on a total uptrend. we broke through the SMA, and then we have a correction in dollar. Now, dollar is at the bottom of its risk range. Look at this uptrend right here. This is not just some weak little, 1 week uptrend. This is an uptrend that has been in place for one whole month now, all right? Now, you draw a line from there to there. What does this put us at? The bottom of the risk range for the dollar, which means the probability to break out higher on the dollar becomes extremely significant. This is why today is such a good day, because look how long it's taken us to get to the bottom of the trend here, all right? That's why I love it when days like this come together and you can just make the easy trades. Why? Because we're at the bottom of the range here. All right, in the S&P 500, let's go over this chart, all right? So SPX, what's here? Well, we get a bearish reversal candle on the SMA, okay? And that's a very bad sign, all right? So whenever you put that in combination with the dollar on an uptrend, all right, and at the bottom of its range, and then you got rising VIX, all right? Let's go over the VIX, which is the next extremely important thing to go over. Right? So when you got VIX rising, goes on a complete tear, what does this mean? All right. Once again, this lines up with the technical and chart analysis, guys. This is why, to the people who believe technical analysis is fake, you're completely wrong, and that's why you need to learn it. Why? Because watch, we get the job support. What happens? The market goes up. So what's going to happen to volatility? Most likely, volatility goes down when the market goes up. When volatility goes down, we reach where we filled or where we started this gap up. Okay. So when we get there, what's most likely to happen? VIX shoots up again. All right. So it all lines up, right? Because US dollar, right? I hope this makes sense, okay? To me, it makes all sense because I have it all pictured in my mind. You're at the bottom of the dollar risk range, right? Let me highlight this again because I know for some people it might be hard to notice this or realize this, but bottom of the risk range here on the dollar. So what's that mean? Dollar spikes up most likely. What happens here? VIX to the bottom of its risk range. What happens there? It spikes up. And when both the dollar and the VIX spike up and they're aligned like this together, that's where you get market drops. That's where you get little crashes. And that's why we will have a significant drop today after the job support most likely, or at some point intraday today. So that's why you need to be ready for it. And this is the thing. I can't predict if it's going to be at 8:30 or 9:30 today. Right? It is very likely to happen after that job support and after the initial reaction takes place, but it depends what level we're at, right? So if we get crushed on the job support and we come down to this level and we bounce back up intraday up to this level, that's when you're going to want to short it. You know what I mean? So you have to see how the job support is going to affect the market first, and then you need to be keeping track of the dollar and the VIX to gauge how you should trade it. All right, so it will come intraday today. All right, there's going to be a significant shorting opportunity, but you need to be ready for it. And this brings me into why instead of trading the S&P 500, you should trade gold. Why? Because dollar and gold are 95% inversely correlated. Okay, now what's happened here? All right, let's drop the channel so it just makes more sense. All right, where's the price channel? I'll be right back because I don't like making these videos long. Let's draw this up. Okay. So to make things more visual and more apparent for the people who don't see it, right? I see this without drawing these lines up, okay? This would be the bottom of the range. This would be the top of the range. Now, I'm not saying that, okay, gold's going to get up here, then you just short it, right? This is where you use the combination of the VIX, the dollar, the market, and the other indices to confirm, right? So if you're at the bottom of the range on gold, what does this mean? If it's inversely correlated with the dollar, then the dollar at this point should be going up. But watch this, if the dollar is at the top of its range as well, then that gives you a higher probability to bounce up, alright? So hopefully that makes sense. You're going to have to find a way to wrap your head around that, and if you do stick around this channel, you eventually will get it for sure if you don't right now. Alright, so it's all about using the trend and the channels in combination with other things to confirm your case of whether something is going to go up or down, and that's an extremely powerful tool that you don't see enough people showing you or utilizing this strategy on YouTube. Alright, so with that being said, let's get back into the option chain. And the thing I forgot to point out when we were talking about the option chain before is, okay, the closest strike here is 16.4, right? Or let's go 2 strikes out. Alright, 2 strikes out, you'll make $400 once you reach in the money. Alright, on the S&P 500, you're paying $27, and then once you're in the money, you're up $600. All right, so it's $600 more profitable within 2 strikes, or it's $200 more profitable, but you're paying an elevated premium. All right, so is it worth it to you? The answer is most likely no. If we're talking about percentage return, gold is giving you a much better percentage return based on the significance of the moves that we'll be getting today. All right, so let's get this out of my face. All right, like I said, I like to keep my charts clean because I already understand this without drawing it up. This would be the top level for the day. This would be the bottom level for now. Okay, so when you get to the top of the level, this is when your chances increase that it's actually going to reverse to the downside. See, people think when things are going up, that's whenever you need to buy calls, but it's the very opposite. When you reach this topping level, this is when you want to buy shorts. Okay, so this is how you trade it today. If you're targeting a price of 1890, right, then you want to go with the 1900 strikes. The thing is that this is not just going to be a one down day, right? This can be multiple days based off of the dollar, right? Because not only is at the bottom of the range, the upside potential is higher, so it can continue higher for not just one day, but for multiple days. All right, that's why going with an out of the money strike is not, it's not a bad plan here. But if you're going for a day trade and today only, all right, then you want to go with the 1900s, the 1890s, and those will trigger today. Okay, so the only thing I will say is that we're holding up this SMA for now, but that's the thing is this is why you got to know how to figure out when we're going to break through these important levels, right? And we know we'll break through this SMA very soon because the dollar is about to surge up. This is how you don't fall into a group of traders, right? Although Ricky Gutierrez is profitable, he is not as good as us when it comes to identifying, these trend reversals and the chart patterns and everything you need to know when things are actually going to break through important levels, right? So if Ricky Gutierrez today was looking at this chart, he'd probably be like, guys, we are above the SMA, all right? That's all he would say. That's all he knows, all right? But anyone can trade, buying the SMAs whenever you tap off of it, but that's when you get burned is whenever you actually get broken through the SMA. All right, so sure, Ricky Gutierrez or whoever else on the YouTube can trade that, right? But your grandmother can do that as well. It's not hard to trade little important trend lines and SMAs like this, but it's knowing when you're going to break through that, understanding your correlations that's really going to get you paid. All right, so on top of gold, what you can trade today is equities, right? Because if dollar is going up, that means more people are taking out of equities, all right? And when you take out of equities, I would say the leader, or at least one of the best equities you can be taking out of or shorting today would be Apple, all right? So in combination with the dollar, the VIX, right? I sound like a broken record, but that's extremely important, is combining these factors together to confirm your plays, your shorts, your longs, all right? Then when you get a bounce on the Apple stock, right? But you're having these other factors go against it, that's when you want to short it. So you short bounces on Apple. Any bounces. They might be little bounces, they might be significant bounces. Obviously, that all ties in with the dollar and the VIX. Alright, so this is how you trade the markets today. Alright. With everything being said, I hope you found this video useful. If you made it all the way to the end, let me know. Also, let me know if you have any questions. I'll be more than happy to get to you. And congratulations, because you're going to be more ready than probably 99% of traders going into today. Alright, so that's how I know you're a serious trader. That's how I know you're really with me and you're here to get better. So let me know if you made it to the end of the video. On top of that, we'll have a Reddit community link down below if you want to join that. Give us your trading ideas for the weeks, alright? Of course, I'm giving you trading ideas, but I want to hear what you guys got to say too. Alright, drop a like if you found the video useful. I'm Alexander, the Day Trading Champ, and I will see you guys on the next video.